Hello traders, welcome back to GoldMind Trading. This is our third episode of our video series on the market structure. Do you know why every time you make profit, by the end of the trading day or the trading week, you have lost everything that you have obtained previously? You have given back all the profit that you had made. That happened to me personally. But by the end of this video, I'm going to explain everything, all the secret behind it, and how you'll be able to safeguard your already secured profit. The secret is one: failure to spot or identify the shift in the market. And in this third video episode, it's what I'm going to be explaining. The previous episode, I have talked about how to determine the direction of the market, that is the upward and the downward direction, or bearish and bearish direction. I also talked about determining the strong and the weak points. If you are finding value in these episodes, please remember to like, comment, and subscribe, because when you subscribe, that will be able not to miss the next episodes. So, failure to understand or to determine the shift in the market direction can result into you losing all the profits that you have obtained from your previous trades. So I have a clear chart here that I've done for you. This chart, let me explain this chart here. So we have the market. Initially, we see that the market was in an uptrend, forming high highs and high lows and breaking structures. We remember in our previous episode, I told you that you can only determine a high low point or a single point after the break of structure of the previous high point. And you know what means when the market breaks of structure. Now here, let me explain this. You see this market is moving in a high low, a high, and breaking structure. This is a confirmation of a momentum, bullish momentum in the market. And we said that after every break of structure, we expect a pullback into either a discount or a premium zone. So after break of this structure, it formed another point high, and then it pulled back into a discount zone and formed a high low. Then it continued to break another structure to form a high. This point to hold and the market to continue in a bullish trend, but it did not happen. We see that it moved from forming a high and it went down, or it retraced down and broke this structure here, a high low, form a low point. What does that one tell you? That one tells you that the market is the bearish. The bearish are taking control of the market. And on this point, it is an indication, number one, that the trend is changing. So the market pulled back, it formed a point which is lower than this one, the high point. So it went back, it continued and broke this level, broke the structure to form a low point. Immediately, if you were previously taking buys, now you have to switch your mind to start looking for sales. I personally, I wouldn't hesitate to look for sales on this point or the break of this structure. But in most cases, those who know the liquidity concept, this could be a liquidity sweep. So most traders wait for 2 points, low and low high points. Then after determining low high point, remember we cannot determine this point unless you have obtained a break of structure down here. So after having that break of structure and determining our next point, low point, then we wait for the pull back. into the discount zone. So when we get that pullback, then we are able to take another short or a share, which so someone who took a short here, he was in the right direction with the market and he would have captured all this move here. But remember, on the break of structure, we expect a pullback. And because this point, every point that breaks a structure, we consider it to be a strong and protected point. So this point here, which you see here, our previous low high point, it broke the structure. So in our mind, we would consider it as a strong and protected point, and we would consider, if we are to continue in that very strength, we would consider it to keep breaking more structures. But what happens here? This point, when it came back, it broke the structure. Yes, it broke this point. That means the bulls came with a lot of orders, a lot of force, a lot of momentum that pushed the price to break the structure to form another point high. What did I say here? We said that this point took a strong high and became protected, which confirms a bullish trend change. What happened here? So now, to me, that would be an indication that we are shifting the trend, and I wouldn't hesitate to take a trade, to take a long when the market retraces in this discount. Market retraces in that discount zone, it continued in a bullish trend. Okay, well, now let's see that one on live. Let's see it. Good. Let's see that on live charts. This is a gold chart that I. So what are we seeing here? We are seeing something. Initially, the market was in a bullish trend. Okay, here it formed double bottom, which is a change of trend market structure. Then it came and broke this structure. So it retraced back here and it continued and broke the structure to form another point here, a high low point. It pulled back. You remember, all these are strong and protected points. It pulled back, it continued and broke the structure. It pulled back and continued and broke the structure. Now, we see on this point, after breaking this structure, we would expect this point to hold, but instead it did. So on this certain level of the price, the bears came in with a lot of momentum that pushed the price down here and broke this structure here that you see. It broke that structure that you see there. Then it retraced back. We would expect, if the market was to continue in a bullish trend, to come and break, but it did not break structure. We see it came and retraced back there and then moved back, broke this structure. Now, that would be an indication for me that we have shifted the trend. We have moved from an upward to downward trend. So the market, we see the market retracing back and breaking another structure. We see that the market has pushed. As you continue with our video episode, I'm going to introduce an element of liquidity. This was a liquidity created, but our major point was here up. So the market came back but didn't break the structure. Instead, it moved in a downward direction. It came back here, took some liquidity, but it continued breaking small internal structures and broke another structure. So this is the structure point that I will be interested. So members, understanding the market structure is very paramount, because if you cannot understand the market structure, it can be as challenging as hard way trading Forex market, because market structure tells everything. It's like a reading map. If you cannot read how the market structure determines, whether the market structure is in upward or a downward trend, and know at specific point where the market is changing the trend, then it will be hard for you to keep or to deposit the profit that you have already made. So members, if you are finding this video with value or good, please don't forget to like, share, and subscribe.